And now we come to the topic order block. I know most of you already know what order blocks are. Some of you might not. And I always try to have explain everything in a way that even people who don't trade understand things. And I also try to do this with the order block. So what you see now, maybe you haven't seen so far. But what is an order block? It is a block of orders. We all know by now the main order blocks we are concentrate on is engulfings. So it's an engulfing pattern. We can see we had a down move and then there was an up move which engulfed the down move. Hence, there must be something in this area that moved the price higher. And usually this is orders waiting there, or which have been waiting there for a long time, which have been put by the banks and the market makers there to move the price from this point on now higher. And what you can see here is that the order block is, the price moved away from the order block, it comes back and mitigates it a little bit, let's say it that way. And if you consider this internal structures, of course, there's a lot of order blocks as well, smaller ones, but this is, let's stay with this order block. And now it comes back and it collects new orders which have been waiting in this block. And these orders have been enough to move price away. Let's say higher in this case. But it was not enough to move it away in order to break this high. So it had to come back because the orders waiting here were stronger and move the price lower and deeper into the order block. So it collected several new orders until the price was again strong enough now to break this high and this high. And that's the reason why if a price comes back to order block and it was mitigated to 50%, it means orders which have been waiting here were enough to move the price. Sometimes it's not enough. It has to go deeper and there's a lot of more orders waiting. One thing we know is that you cannot have one block sitting here with all the orders you need to move the price. That's not possible for the banks. They have to split their orders, and that's why you see these price movements. And this order block is now mitigated and enough to move the price. Now, sometimes, maybe hours, days, weeks later, the price comes back and also probably collects these orders, but those orders which are left here are not strong enough to send the price away again. It probably just has a short reaction and then break through it because there was not enough orders left. But sometimes a few orders are enough, which are on the first layers to move price away. And that's why you see that an order block can be claimed more often until it's completely out of orders, let's say it that way. And then I wanted to talk about order blocks itself. The order blocks we are at the moment looking at in Anne's channel are mainly the engulfing ones, which is the most obvious order block you can have. Again, here you have an up move, which is then followed by a down move and which is engulfing the whole move up. And yeah, that's an engulfing pattern as we know it. There's different explanations on engulfing patterns itself, but you can look that up on yourself if you want to. For us, that's enough. All we need to know is this one. You have this, we call this afterwards as the order block because price moved away and we expect that there must be orders sitting in this block here, because it sent the price lower in this case. Now, what a lot of people, not a lot of people, maybe only in the group, did not recognize so far is that there is an order block in the wicks as well. Not in all the wicks. You have to have a look at the full candle, of course. If this would be a buy candle, I would not consider it being a bearish order block, but it's a sell candle with a large wick, and there is an order block waiting in the wick. So this is something you can consider. if you have a look at order blocks. And why is this the case, that there is a bearish order block in this case in the wick? Because all you have is a buy to sell situation. Price goes up, then goes down. And that's exactly the same what you have here. Price goes up and then goes down. And this one here, if you get this candle with the wick on a 30 minutes time frame, on a 15 minutes you might see this one. Because on a 15 minutes you have two candles, on a 13 minutes you have one candle, and this one candle combined is this obvious engulfing pattern. So have a look at the engulfings and have a look especially on this. And for a, what did we have? A bearish, for a bullish order block, we would have it the other way around, of course. You have a wick to the downside with a blue body on the top. And then I also wanted to talk about other kinds of order blocks, which you might have recognized already, but didn't use so far, which is the doji candle, for example. And why is a doji candle, or why could a doji candle be also a order block? Because it usually on a lower time frame is a consolidation zone. So if you have this candle, let's say on the daily, then the whole day could actually only be a consolidation. Price moved up, down, up, down, up, down, up, down, the whole day. And for the day, you would only see this as consolidation zone. And after this consolidation zone, you usually have a breakout. And if the price breaks out to one side, the whole consolidation zone has an order block. If it breaks out to the upside, usually you have an order block around here. If it breaks out to the downside, you usually have an order block here. It's not easy to say at the moment, but you have to have a look at the price, where the order block is sitting, or where there is obvious order blocks. And it can also be supply and demand flip zones. But one thing you will recognize as you analyze the charts is that doji candles with big wicks are very strong zones as well. And then we have the inside bar, which is actually similar to what I just said before with the consolidation zones, because inside bars on lower time frames can also be consolidation zones and contraction zones. But usually, to my experience, they are a kind of SMC market cycle. What you have here is you can see the contraction here, and then you have a breakout of this zone with an order block waiting here. So you have a consolidation, then you have a breakout. I'm not talking about a wick breakout. I'm talking about a big, obvious breakout where you can see the market maker footsteps. They had to use a lot of money to move the price now lower to break out of this zone. But then they had to come back to this order block to move it again outside of this zone. But I think the SMC market cycle is such an important topic that we should cover it, of course, in an own session. It's a strong strategy by itself, to be honest. So all I want to say here, an inside bar could easily be SMC market cycle on a lower time frame, and it's a strong zone which you can mark up as an order block. You can consider it as an order block. And something I want to point out is also that an order block alone doesn't say much. You have order blocks everywhere. If you have a look at the charts, in order to trade an order block, there has to be a lot more around it. And for me, an engulfing candle pattern is an engulfing candle pattern only. I don't consider every engulfing as an order block. But if this engulfing pattern broke structure, or let's say took liquidity, broke structure, and left imbalance, then this pattern all of a sudden is a valid order block for me, because it did what it should do in order to get to become interesting for me. And of course, then we have, it should not have been mitigated. Why not? Because then we consider it as fresh and strong. And if it created inducement, even better. So then I had a few examples here, which is, this is how I usually mark up my my chart. And I think this was a very nice example, which covers everything. You had the price here moving down, and you had a kind of engulfing pattern here, but you can see here, this is actually not an engulfing, this one is a doji. And usually what I would do here is I would mark up the whole zone, the whole doji, because you never know. However, what I could see here is before this move away from this last buy candle, this move away from this last buy candle happened, it took out equal highs, like you can see here, which means this order block took liquidity and then moved away to break structure. And what it also did was it left imbalance here. You can see here, from here to here, it only moved in one direction. And you can consider this as inducement, a kind of new low it created only to take it out later. So you have a fresh order block, you have imbalance, you have inducement. It took liquidity, it moved away strong, as you can see. So when it comes back, you highlight what I do. I consider this as the full swing zone. So I mark it up as my swing. Then I mark up what's premium, what's discount, what's equilibrium, which is 50% of this zone is equilibrium. Everything above is premium price, everything below is discount price. And then I'm looking for an order block or a strong point of interest, which is this one, which has everything I'm looking for in the premium zone if it's in a downtrend, or in a discount zone if it's for an uptrend. And obviously here, with all our markups, we have a very strong order block in the premium zone, which we are interested in. And if we have our order block checklist, we can go through it and say, is this something we are interested in? We are in a downtrend. Order block took liquidity. Yes, it did. And this is obvious liquidity because it's two same highs. Order block broke structure. Well, it didn't manage to broke it with the first move. So you have a kind of zone which has been created here. This could look completely different, but on a lower time frame, it looks more obvious, I'm pretty sure. So it didn't manage to break this structure with the first move. However, it broke structure finally. And then this is considered as, yes, this order block broke structure. You could also say this order block broke structure because there is a new order block created, which had a reaction on the right side. Everything fine so far, but it's not within the premium zone. It's already in the discount zone. So for me, I would not even see this because I'm only interested in the premium zone. The order block left imbalance. Yes, we talked about it. Left imbalance. Order block was not mitigated. As I drew this zone here, the order block was not mitigated. And the order block created inducement. And this is, for me, it's not the most obvious inducement, but for me it is. So everything is fine for me, where I even would have a direct entry. And now you can see all the words we use: imbalance, mitigation, inducement, liquidity. Now everything should start to make more sense when you have a look at the whole price chart. I also wanted to just draw a theoretical situation where you have, you have a swing zone. This is what you should concentrate on. You have a swing zone from a low to a high, which the whole swing zone broke structure in the past, which is this one, swing zone that broke structure. This is the first thing you have a look at. And then you would have a look at, did it start from a POI, for example, a 4-hour? What kind of order blocks did it create? And you go through the checklist again. Did it take liquidity? We don't know because we don't see it here in the past, and it's theoretical. Did it break structure? Yes, it did. It broke this swing structure here. Did it left imbalance? Yes, it moved away only, did not come back. It left imbalance. Was it mitigated? No, when we draw the line, the zone here to the high, the order block was not mitigated. Did it create inducement? Yes, I would consider this one as inducement, so everything is fine for me. And what I also do when I do this kind of chart analysis is I draw the Fibonacci and the SMC zone next to my swing zone, because everything below 50% here is the discount zone. And for an up move or for a buy entry, I want to have the price coming back exactly, not exactly, somewhere to this zone. It needs to be for sure below the equilibrium, below the 50%. But even better, if there's order blocks resting around here, I'm interested in those order blocks. And I'm also interested in the extreme order blocks. Because remember, as this low broke this high, we consider this one as protected. So next one. Yeah, this is another chart example. It's the final one, I think. You have a swing zone from a low to a high, and this swing broke structure here. And then I'm again mark up the fib, let's say the SMC zone. I'm looking for order blocks in the SMC zone and at the extreme, which would this one would be as well a valid order block. This one here, you can see the wick would be also one probably, but it's been mitigated and broken anyway, so I would go for this and that. We have one order block which is below equilibrium, next to this zone, which I'm interested in. I would mark it up, and you can see here, price comes back, mitigates this order block here, goes a little bit lower than this candle, and then breaks structure again. And if we have our checklist, we would go again and say, did the order block take out liquidity? In this case, it's not very obvious, and it's not very strong maybe, but you can see this order block on the, we would have to have a look on the lower time frame, took out this low as well. This is not considered a strong liquidity takeout. I'm just saying here for this order block, we could say, yeah, it went lower, took out the liquidity below this one, just to afterwards break it again and move higher. So this is fine. We don't see the reaction here if this would be a protected low, because we don't see in the past. But we would go on for the next one. We said, did this one break structure? And yes, it broke structure, exactly this one. It went higher. Did it leave imbalance? Yeah, it left imbalance, not too much, but a little bit. Was it mitigated? No, at this point it wasn't mitigated. Did it create inducement? You can consider this one again as inducement, because you already consider price will come lower than this one. This barely touched equilibrium. You consider that your entry will be lower. Hence, you can also say this could be your engineered inducement. And everything is actually fine so far. You don't always have to have all of them to consider a trade or an order block. But if all of them are there, you would consider this as a very strong point of interest. And you might want to trade it. And you should have a kind of checklist for yourself, because at first you concentrate on all of those topics. You will view the chart differently from that point on. And of course, it will help you. In this case, it was a successful example. It's not always the case, as we know anyways. All right, and this was it for the SMC topics I highlighted. There's a lot of you still here, so